Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1297A, and today's date is June 4th, 2017, and the title of the episode is When Central Bankers Tell You There's No Need to Panic, It's Time to Take Action. Now, before I get started, I just want to make an announcement. I uploaded an interview with Bill Holter on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It'll bring you right to the video. Or you can come over to the X22Report.com site, scroll down a little bit, look over to the right-hand side. You will see the video there, and you can play it right on the site. Or you can go to NewsSentinel.com. Same thing, scroll down a little bit. Look over to your right-hand side, you'll see the video there, and you can play it right on the site. Let's get into the economic collapse financial news. Now, we've been tracking the economy, looking at many of the economic sectors, and we've been looking at many of the economic indicators, and a lot of them are flashing recession. Some are already so bad that we're flashing a depression. And one indicator, which is unemployment, well, we're seeing something very interesting. Historically, unemployment rate lows occurred at or very near to market inflection points preceding a recession. Now, the unemployment rate just released on June 2nd was at 4.29%. It is now just below the average unemployment entry prior to recessions over the last 67 years at 4.4%. So if we look back in time and we go to those years of 2007, 2008, we go to the years 2000, going into 2001, and we go back in time to the 1990s, we go back in time to the 1980s, we go back into the time into the 1970s, the 60s, all the way back in time, what do we see each and every single time? We see each time we reach this point in unemployment where it is at its lowest point, we enter either a recession, a great recession, or a depression. And we are here today at that point. And it tells us, and it's signaling to us, that we're here. We are here at the point of when we're going to enter recession. Now, I think we're already in a recession. Everything that I've been looking at, all the economic data is telling us that we've been in a recession and we're actually heading into a depression, into a collapse scenario. Remember, the government will not tell you, the central bank definitely will not tell you that you're in a recession. You know when they tell you you're in a recession or a depression? When you're already in it, they go back and say, oh yeah, by the way, this started about 8 months ago for all those people that are curious, but we just figured it out now. We've been telling you that we are here. Now, we know a lot of the numbers have been manipulated. And from Morningside Hill, they've calculated that a full 93% of the new jobs reported since 2008, since the Great Recession, 6.3 million out of the 6.7 million, and 40% of the jobs in 2016 alone were added through the business birth and death model. Now, this is a highly controversial model, which is not supported by the data. All data on the establishment birth and death point to an ongoing decrease in entrepreneurship. But what they have done is they are using this model saying that entrepreneurship is growing over time. So here's some information on how they used this model. So over 90% of the jobs created in the past decade were nothing more than statistical adjustments in the BLS model. Now, they use the birth-death adjustment. So in order to account for the jobs created or lost by new business formations or bankruptcies each month, the BLS introduced the birth-death adjustment. It started during the Reagan administration because Reagan was complaining that the Bureau was undercounting the jobs that he created. So they adjusted this model saying, okay, there's a lot more businesses that are being created. They're very small. We can't account for them. And this is how they used it. Now, the birth-death model used to have a terrible name. It was the bias adjustment factor. So this adjustment, the way it is computed, it uses a model based on probability-based sampling methodology. Now, according to the BLS, in the depths of the 2007-2009 recession, the birth-death adjustment continued to add a lot of jobs. 904,000 jobs were added in 2009 alone. Now, we need to think about what happened in 2008-2009, because during the Great Recession, what did we see happening? A lot of businesses were defaulting. A lot of businesses went out of business, and that continually skyrocketed throughout time. And the birth and death adjustment would be a net negative and subtract from the overall jobs number instead of adding to it. So it turns out the BLS, they wanted to include this adjustment because they wanted to make it look like that jobs were being created. And basically, they used this even though businesses were declining during that period, because again, we have to go back to the original thought process of this entire system. During the 80s, small businesses were being created left and right, and Reagan was afraid that they were not being accounted for. And you can see back in that time, the entire economy was growing. Here, businesses have been declining, but they were still using this model, making everyone think that businesses were popping up in all different places. So we could see how they skewed the entire unemployment numbers by using this model. So basically what has happened is that during this period of time, using this statistical calculation, they're showing us that these jobs really don't exist because they're only there in statistics. They're not there in real life. And that's why 93% of all jobs were created using this method. And if you subtract out all of this, the unemployment is not 4.29%. Because as we can see, that businesses per year continually declined. And they are still declining. I mean, think about what you're seeing now at a much larger scale. I mean, the small businesses you really couldn't see because the corporate media really doesn't report on it. You don't really know how many small businesses there are. Yes, the government does because they keep track of all of this. And they realize that, yes, they're declining, but they were still using the old model because they wanted to make us believe that things were getting better. This was part of their plan. Now we see it on a much larger scale. We see retail stores. Well, they're closing all over the place. A lot of them are going bankrupt. I mean, look at Gymboree. Just a couple days ago, we reported on how Gymboree, if they don't make their interest payments, what were they going to have to do? They were going to have to declare bankruptcy. Well, guess what? They missed their interest payment. So guess what they're going to have to do right now? They have to declare bankruptcy. And this is not the only business. I mean, we have many businesses right now that are slated to declare bankruptcy sometime during this year. This is how bad it is. We're looking at 9 West. We're looking at True Religion Jeans. We're looking at Charming Charlie. We're looking at Claire Stores, Chinos, and many others, Sears, many others that are going to declare bankruptcy. They're going to be closing a lot of stores. And again, the birth-death model will not fit into this. Because as these larger stores close, a lot of the small businesses are closing. And they're not being created. And the whole thing is a complete illusion. And they've been using this all along. Out in San Francisco, what do we see? Well, we know that the housing bubble is starting to deflate there. We're also seeing something very interesting. Hiring has dropped by 4.1% in May, year over year. And this is coming out of the LinkedIn's workforce report. So when you compare this with the Employment Development Department and their data, well, it shows that the growth of both the labor force and the employment in San Francisco, it is fizzling right now. And we could see when we look at a graph of this, the job growth in San Francisco year over year, you can see that it has been declining. It has not been going the opposite way where it's been increasing. It is declining right now. And we're hitting that point where we're almost back to where we were prior to 2008 and after 2008 where everything just completely fell apart. Now we're starting to see in many different areas, things rapidly fall apart very, very quickly. We're seeing new home sales, they're declining. We see existing home sales declining, pending home sales declining. More and more stores, they're going bankrupt, they're closing. A lot of small businesses are closing. Corporate defaults on the rise. Corporate debt bomb is here. And we can see that most of these bubbles, well, they're deflating or they're getting ready to pop. Now, out in Greenwich, Connecticut, we see something very interesting. This is the ultra luxury estates priced over $10 million. And they collapsed after 2008. And things are not looking good right now. Now, there were only 5 sales for $10 million or more in 2015 and 2016. This is the slowest pace in this category since 2008. Now, prior to 2008, they were selling like crazy all over the place. Around 2010, leading up to about 2014, again, the bubbles were increasing. Free money was out there. The central banks, the Fed, they were pushing the money into the stock market, and these homes took off. Now we see the opposite happening, where things are starting to fizzle out and die down once again. Coming from Houlihan and Lawrence, they're saying there's roughly around 38 properties listed for $10 million in and around that area of Greenwich. And they're saying to sell these type of properties, it might take it as long as 7 years, because right now there's just nobody coming whatsoever, and traffic has dried up, the sales have dried up, and they're all trying to figure out what is going on here. Now, we've been following the real estate market for quite a while. We understand what is going on, and you can see it throughout many, many different areas. Now, again, Case-Shiller has the 20 cities where they've been blowing up bubbles, and yes, that hit other areas in the outlying areas, but outside of the 20 cities, you can see that real estate is having a very difficult time, and we need to understand that this is the hot season for real estate. This is the season that everyone waits for. This is when they put their houses up for sale. This is when the flowers are blooming, when the weather is warm, everyone's in a good mood. You can go out and take a look at the homes, and we're seeing the opposite happen. And this is continually happening every single year, where the summer months, the spring months, they continually decline. And this is going to be one of the worst seasons for real estate that we have seen in a very long time. Now, we understand that the central banks, since 2008, they'd had to purchase up a huge amount of assets, toxic assets, bonds, stocks, you name it. They had to purchase these things to keep the economies operational. Because without them in their basements, with their trading desks, buying up all these different things, the entire system would have imploded in 2008. Now, this doesn't mean they made it a lot better. It means they're the ones just holding all of this. They created trillions and trillions of dollars out of thin air. Listen, they're not on the hook for this. The people are on the hook for this. They're just holding all the assets. They purchased all the assets. They hold trillions and trillions of dollars in real estate and bonds and things like that. Actually, if you look at it, 50% of this universe is owned by banks, central banks, or commercial banks. Central banks own a third of the entire 54 trillion global bond market. Now think about this. They want to unwind their balance sheets. They want to sell this. Now, how are they going to do this without crashing the bond market? It is completely impossible, and they know this. They realize that they will not be able to do this. And what we're seeing right now is that they're stuck. And the only way to get out of this is to crash the system, is to bring it down. Now, in their minds, well, we can bring the system down. We can make a lot of cash on the way down. We can buy up more assets, and we can push the blame to someplace else. This has been their plan for a very long time. On the other side, we have Trump using their tactics and trying to blow up these bubbles and trying to shift the narrative on the central banks. And what we're seeing is that banks around the world, we know they're insolvent, they're having a lot of trouble. The central bank continually steps in, tries to bail them out. If they can't bail them out, they're going to use bail-ins. And we can see Deutsche Bank, yes, that's still in trouble. The Italian banks are still in trouble. We talked about Spain's Banco Popular. That bank is in a huge amount of trouble. And what's very interesting about all of this is that the bankers, the central bankers, they're telling the employees, the individuals who have investment with the bank, don't panic, everything is going to be okay. Now, every time a central bank or bank tells you that everything is going to be okay, don't panic, this is when you need to take action. This is when you need to say, you know something? I'm going to take my funds out of the bank. I'm going to invest it someplace else. I'm going to maybe take it, put it into cryptocurrency. Maybe I'm going to take it and put it into silver and gold. But whatever I'm going to do, I'm going to remove it from the bank. Now, when this system comes down, you're not going to get this type of warning. But we've heard these type of warnings before. Remember, Ben Bernanke, we're not forecasting any type of recession. Everything's contained, the subprime securities, nothing to worry about. Housing prices, they never fall. They just keep going up. When you hear a central banker or a banker telling you that everything's going to be fine, don't panic. This is when you say, okay, you know something? Let me just do something to protect myself, because I don't really care what they have to say, because they've been wrong almost every single time. And every time they told us that everything was going to be okay, it wasn't. And we are entering that phase once again. You're going to hear that everything is going to be fine. This bank is fine, don't worry about it. That bank is fine, don't worry about it. The economy is doing fine. Yes, the market dropped by 1,000 points, but don't worry. Everything is fine. Now, if you haven't started to prepare, I would start preparing now, making sure that you can protect yourself from when these things happen. You don't want to be that individual back in 2008. Maybe you were that individual back in 2008, where all of a sudden you lost your job, you're living in your house, you can't pay your bills, you can't find another job, and all your wealth is completely gone because you had to declare bankruptcy. The bank took your house. You don't want to be stuck in that situation. You want to protect yourself for when things go south. And basically, in my personal opinion, is to get out of paper assets, to put it someplace where it basically protects your wealth. That is gold, silver. Some people are saying cryptocurrency. I would have a mix right now at this point to make sure you're covered in all different areas. And just to be clear about all this, I can understand if it was just one economic indicator saying, okay, you know something, it's flashing a recession and all the others are not. But now we're seeing the unemployment numbers. Historically, we've seen the same thing happen time and time again. We see industrial production, the same thing. We're seeing the credit impulse. It is now in the negative territory. We see the Fed's financial indicators also pointing to a recession. And this continues on and on and on. Now, the other indicators are things that we see with our own eyes. All the stores are contracting. Many stores are going bankrupt. People are losing their jobs. Small businesses have been declining. Wages have been declining. Interest rates, well, they can't really raise them back to the normal rate. Most of the world is either zero or negative. They're continuing with stimulus in the background. They just keep on shifting it from country, from bank to bank. So what we're seeing right now is all these different economic indicators, they're all signaling the same thing now. And we can see with our own eyes the economy contracting. I'm not talking about the stock market because that is completely manipulated. I'm talking about everything else is contracting. And eventually what will happen as it continually contracts, the whole thing just implodes on itself. And this is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.